Hey traders, Akil here, and welcome back to another edition of the Forex Market Preview. Lately in these videos, I've been really concentrating on one trading opportunity and walking you through it. That way, not to overwhelm you. We have a lot of newer traders that come in and stumble across this YouTube channel, and the last thing I want to do is make trading seem overcomplicated, meaning give them so much that their brain explodes, they start to feel discouraged, like there's no way I can do this. So I feel it's best to concentrate on one specific opportunity. That way you get a little bit of information, you have time to digest it throughout the week, and then you can come back the next week and do the same thing. However, today I'm going to try something a little bit different. I'm going to take you on a much longer stroll around the markets, kind of giving you an example of what I do in my pre-week analysis. You see, the weekend is the time where I really start to formulate all of my ideas about the market. I look at how the previous week has closed. I really take a bird's eye view of the different pairs that I watch, and I start generating ideas of what I need to look for the upcoming week and what type of predictions I need to make. For you guys that are familiar with our IPDE process, identify, predict, decide, execute, this is essentially the identification and the prediction part of the process. Then as the week goes on and price starts to move, now I can work on the decision point, how, if I can get involved, and of course the execution. And if you guys aren't familiar with that IPDE process, well, I don't know if I'm supposed to tell you this or not, but let's just say this. Jason Stapleton may be putting out a training on it. I'm not sure if this is going to happen. I think it will. I'm not sure when, but you don't want to miss it. So make sure you're on our email list. That way you get updated whenever this training is released. Just head over to www.tradeempowered.com. Click the Learn to Trade tab at the very top of the screen. There should be a little pop-up box that comes in allowing you to enter your email, enter your email address, and then take the time to check out all of the free workshops that we have on our website as well. So I'm going to take you around a stroll of the markets. This is actually my first time looking at these charts, so it's kind of a live look at how I do my analysis and for my perspective. I'll chop it up somewhat because I don't want to make this video an hour long. But let me know what you guys think. Let me know if you kind of like this bigger picture analysis of doing more pairs, but maybe not going into as much detail, or if you like the way that we've been doing it, where I'm focused on one opportunity and that being kind of the main goal of the video. So sit back, relax, get your notebook out, and let's start this journey. All right, so we're on the daily chart for the pound dollar, and you can see we had a very bearish move to end our week this Friday. It was actually, we caught a great move in the live trading room, not on this pair, but on a pound yen trade where Jason Stapleton had actually called a big breakout on a higher time frame. Couldn't meet my rules for getting involved, but we were able to go down to the range bar chart and catch a pretty decent trend continuation opportunity. But here's what recently happened in this trade. You can see price action had rallied up here, and then we put in sort of a rising channel. You'll hear me refer to this as a rising wedge as well. Technically, this one doesn't really wedge, but it's a rising channel. And you can see that as our price action was rising, we actually had some divergence. We showed some bearish divergence on the RSI as well. And typically when you see this pattern, it comes after the market has made a pretty high momentum move, and then it kind of just starts to lose momentum. You can see the buying pressure starts to slow down as the angle, there's a much better word for it, but the angle of our movement starts to slow down, and then we usually fall off as we just did. What I'm looking for now is where would be the next opportunity to buy. Slope, that's the word I was looking for, slope. That's the college word. But where would be the next opportunity to buy? And I look at a level right in here. If you pardon me, I'm going to put my crosshairs back on. It stinks when I'm doing this for video, but it really helps me with my analysis using the crosshairs. That way I can kind of just look left and see where structure's at. And if I take a look at our previous structure low right here, and I draw a straight line out, you're going to see price action just came down to a point where We had a little bit of consolidation right here. That will make more sense on the lower time frame, I promise you. But we also had previous structure looking left here as well. This is basically the top of the channel that we came in, or that we've been in since last September. So if I go down to the lower time frame, this is going to be a pretty decent area to look for a buying opportunity. Look for an area where the market, where the selling maybe dried up. We can see more buyers get involved and get a little bit of a push back up. Now, I'm not expecting a push back up to retest previous structure highs, anything like that. Nothing on the chart has given me reason to predict that. But I certainly think we can get a push back up into, say, a level like this, right? You can see our previous level of structure support in here. We had resistance, 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 resistance. Let me go and get these on here for you. Resistance, 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 resistance. Resistance was broken, right? It then became support, 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 support. So it wouldn't surprise me if price action came to retest that level. And understand this, when you're looking for counter trend trading opportunities, I like using the cookie jar reference. We're not looking to reach our hand in the cookie jar and steal each and every single cookie in there. Why? Well, because that's how you get caught, right? You get caught going for the entire move, right? A lot of rookie traders will try to catch the entire move, the ultimate bottom to the ultimate top, and most of the time they'll get burnt. Maybe there will be that one time where it actually pays off and then they think they're a super trader and that gives them the confidence to lose more money in the markets. But eventually you typically go broke doing that. So for a counter trend trading style, we're just looking for a little piece of the pie. We're looking to kind of sneak into the cookie jar, grab a little corner piece and sneak out and get our bite. And we're looking to do that over and over again in the markets. And it's not glorious. You don't get to upload your chart to the trading forums or Facebook or whatever and say, hey guys, a million pip winner. But you can easily put together a consistently profitable plan doing that and, last in these markets instead of falling into the pack of traders that, 90% of traders lose 90% of their money in 90 days. So a retest of this level isn't sexy, but there's 40 pips of available profit in here. And you can see here that my RSI, that's the black line down here, my RSI has gone oversold, right? We're below the 20. I have my RSI set to 20 and 80. The traditional is 70 and 30. So I want those real extreme levels of overbought and oversold. The RSI has been exhausted. And it wouldn't surprise me if we saw a little bit of relief. And if I head over to my hourly chart here, right, you can see, right, here's our DSR level, dynamic support and resistance, that green box. That basically shows me, it gives me a visual representation of where support and where resistance is at. It's even pretty cool because as you can see here, this red box, which is green, this means this was a previous level of support. Once it was broken, it is now turned to resistance, and you can do some cool things on here. I don't even know what I have it set on, but you can set it towards different time frames. Right now it's set to the 240. So these boxes are essentially showing me support and resistance levels off of my 4-hour time frame. If I wanted to do it for my trading time frame, let me just put in a different one. If I want to do it for my trading time frame, where are you at? There you go. Too many indicators. I can just set it to the 60-minute time frame, and that will give me a look at support and resistance levels based on the time frame I'm actually looking on. So let's just put it here, and boom, you can see the smaller levels show up. So you can see price action made its way down into this resistance level. The RSI is overextended, even more so here on the hourly. We came all the way down to about 7. And what I would be looking for is a retest of previous structure, a retest of our reversal right here, our little V bottom so far. And this would give us a double bottom, right? This would give us a retest of structure. And essentially this means price action came down, right? You can see the bears tried to push, got rejected with a very nice pin bar right here, a bar that has a long shadow to the downside and closes almost all the way toward the top. That's a very strong bullish candle. We then rally up and we get 3 bullish candles after that. Now, if we were to, this can easily just go back up, first and foremost. But if you're looking for a more conservative reason to get involved, you wait for a double top. So you wait for price action to push back down into that level. You see if that level will hold once again. So if you were to visualize it, you essentially look at the bears making one more push, the bulls, boom, smacking them in the face and rejecting them once again. Maybe you get some divergence here on the RSI like we looked at on the higher time frame, and that's going to be a very conservative entry reason to look for a move back up to that previous level of support, which was right, let's just call it right in here, right? Let's say 2840s, right? You probably look a little bit higher, but 2840s just for our quick view today. And again, it doesn't seem very, very sexy, but a move like that can easily gain you about, what, 50 something pips. So that's what I'll be looking for on pound dollar to start the week. A nice, simple structure-based trade, nice, simple, conservative counter trend trading opportunity. So we're here now on the euro yen. Again, starting on the daily. I'm always going to start on the daily. I'm going to go daily 4 hour 60. That's the routine, the ritual that I follow for my top-down analysis. And this has been an interesting pair here. We've gotten above our previous level of resistance right here. There's a little bit of consolidation looking left, but I thought once we got above this level, once we kind of broke out of this little consolidation, we'd see a spike up a little bit higher to maybe 128 level. And so far, we've just consolidated and bounced back and forth. We got above, then we retraced, and we came back up, and then we retraced again. And when you're dealing with the yen, wacky things always happen, especially with it being kind of the battling back and forth with the dollar to be the safe haven pair. But there's been some very interesting movement on this pair so far. And we go down to the 240 chart next. And you can see that our most recent move was this. Again, we had our consolidation right in here. We then broke out of that. We retested this level. And I thought we would see a trend continuation opportunity here. We were actually, I remember this was about, 2 weeks ago, I think. We were looking in a live room. This is one of in the Syndicate as well, one of the trades I had on my radar for a trend continuation buy. And we got a tricky day with the yen, and we held this level, but never got any type of entry reason. So we came down and we came all the way back up to retest previous structure highs. And now we're coming right back down again to about the halfway point of this level. And this is interesting because if we head over to our hourly chart, I'm actually going to get rid of our smaller DSRs. I like a cleaner chart, kind of old school. So let's get rid of this. The traders I work with, they love the DSR. Oh, I got rid of the wrong ones. They love the DSRs for, I just got rid of something else. They love the DSRs for trading purposes. I like a clean chart. But here's what we had. So you can see we retested our DSR level. Price actually spiked all the way up to our previous dynamic resistance level up here. RSI went overextended, right? We went overbought right here. Beautiful counter trend trading opportunity. Trading in a retest of previous structure highs. We ran right off of that. DSR held. Perfect. Now we're retracing, and the RSI went from, this is something we've been working on in our strategy lab, we went from an overbought condition up here directly into an oversold position down here. We've been calling this the RSI swap, and it's a technique we've been working on to find trading opportunities. And what's interesting about this level, again, if I just draw my horizontal line out, and for you guys that are new, I'm very visual. Like, I like clean charts as far as I don't like a lot of indicators and whatnot and stuff like that. But I like drawing out lines and I'm not really big into trend lines. I like drawing out horizontal lines. It allows me to look left and really get kind of a visual look at where price action came to. And if we take a look at the area in which price action's at right now, you can see that this area was tested a few times as previous structure support. And looking left, you can see tested even more times as previous structure resistance. This also looks to be about the halfway point of our move here. Oh, look at that, right on a 50% Fibonacci level. So if I take my Fibonacci tool out, and it's always fun doing this for the first time, this is pretty cool. If I take my Fibonacci tool out, you can see we came right to a 50% Fibonacci retracement level. And 50% isn't technically a Fibonacci number, but it is a psychological number, the halfway point, halves, quarters, thirds. Those are all psychological numbers that we like as traders, and we may not know it, but we subconsciously look for those levels and feel comfortable with those levels when looking on a chart. So we have a few things happening here. We have price action coming into that midway point. We have a previous structure swap level, so a level where price was found support and resistance in the past, and now we're consolidating. We're consolidating with some divergence on the RSI. So you can see the RSI here is pointing upwards. Zoop. Price action is essentially going sideways. So this is a sign. It doesn't mean buy it, but this is a clue that could be used for potential buying opportunity. So it would actually be a pretty, if you can find a reason for entry here, it would be a pretty low risk opportunity. You're looking at, let's say, stops below this level right here. And these are the these are the type of trades I like. I'm not a high percentage winning trader. I'm not a 70% winning trader. I'm about a 50% trader historically. I was 55. I'm getting a little bit worse. I'm becoming more profitable, but I'm getting worse. It's weird how that happens. But I'll take it. P&L at the end of the day is the most important thing. But you're looking at a potential risk of about that much with a reward of about this much. And you can see that's easily about, looks like a 2.5 to 1 risk reward. So it's not a bad trading opportunity that you can look for if you can find that reason for entry, about a 2 to 1, 2.5 to 1 risk reward there. And then of course you can shoot for extended targets if you're a trend following trader, or, you can take the full thing off. You can do whatever you want at that level. But the first initial stopping point I would look for is a retest of our red DSR zone up here. So pretty cool opportunity on euro yen setting up. And it's a little against the grain, because when you look at this, your traditional, consolidation pattern traders, your flag pattern traders are going to say this screams breakout to the downside. And it does. But that's why you want to have a full perspective of what's going on in the market. All right, dollar yen. You can see some of my notes on from our live room. We were tearing this trade apart. This has been a fantastic pair for the last couple of weeks. We started off with this bad boy right here. Let me just click my history and watch what's going to show up. Yep, look at that. We started off with this cipher. This is the Constellation tool, by the way. This is a pattern recognition tool we have on, something that helps our traders just see pattern formations in the market, but also helps with the back testing process and the identification process and training their eyes to see advanced pattern formations. I always stress to them, you don't want to use it as a crutch. I'm really highly against that, meaning you just don't want to flick the tool on, put it on live, and just trade everything it shows you. But you do want to use it for confirmation and confidence, meaning that you attempt to identify the potential advanced pattern formation on your own, and then maybe you go back and click Constellation and say, "Oh, look at that, Constellation agrees with me," and that just gives you confidence, and that also may show you advanced pattern formations that you missed, which help train your eyes. But you can see we had a beautiful 2-target winner on a cipher formation here. We had an X to A to B, B to C, C to D last week. Came down, or 2 weeks ago, came down. This was about a 400 pip winner for our traders, I believe, in total. Let me just check here. Had about 200 pips to target 1, and another 400 to target 2. Ooh, another 350 to target 2. So 550 pip trade. We're going crazy over this in the live room, and it was relatively pain free. It's a little bit difficult because it did take a couple days to form. That's what's going to happen when you're on a higher time frame. But it really, aside from an initial maybe 40 pip move against us, it rolled right over. And then afterwards, check this out. This is what we also had. We came down to the hourly. This was last week, and we actually caught a bat formation as well. We had this going on. We had an X right here. Boom. X to A to B, B to C, and a CD completion down here, basically at 111 even. Came up to hit target 1, still looking for a move to target 2 is a little bit higher. So yen has been a good pair. It's a tricky pair for many. I have a few traders I work with that absolutely hate this pair because it's typically a trendy pair, and it's not always the best for advanced pattern formation trading, but it's put in a nice little streak here. But anyway, back to the analysis. Here's what's interesting about yen. This is a pair that's been hard to get a read on. Again, dollar yen has been a tricky pair because it's basically been called the Trump trade. It's when people fear the dollar, become unconfident about the dollar, they take their money from the dollar and they've been putting it in the yen, and then vice versa. When people feel confident about the dollar, they take their money out of the yen, they move it into the dollar. These are both kind of safe haven pairs. And essentially it's been on the economic news we've been having, but it's more so it's been on Trump. And if you know anything about our President Trump, it's like, it's a roll of the dice. You never know what to expect from him. Any day can be a controversy, and it's been an interesting pair. But here's what I'm looking at on this pair. The recent move has been actually a reversal type of move. You can see price action has been in a shorter downtrend here, shorter bearish trend. We then have come up and we put in a higher high, higher close above this level of structure right here. We've come down to retest this level, and this is what is called a head and shoulders pattern, right? You have a left shoulder there, a right shoulder there, or a head down there, I should say, a right shoulder up here. And then you're gonna have a slanted neckline. I prefer a horizontal neckline, one that goes straight across, but the markets aren't always perfect. But typically or traditionally, this is a reversal pattern when the market is going from one trend to another. So if this is indeed going to play out as a head and shoulders, and we don't know yet, we never know. This is why we just make predictions. If anyone tells you it will, then they're just lying to you. I hate when I see that from traders. Kill. Price action will go here. The market will do this. All right, the market will take all your money and you will go broke if you have that mindset. I swear. We can't put ourselves humble. You got to be humble, right? Kendrick Lamar said it best, right? Be humble. You got to be humble and just, accept that we don't know what the market's going to do and we can't control what the market's going to do. Our job is to participate, and our job is to make the best prediction as possible, make predictions that give us an edge in the markets, and then make sure we do our job in executing that edge and exploiting that edge as many times as we can for profit. But if this is going to be a head and shoulders formation, then the next move is going to be a retest of our shoulder up here. So a move all the way basically to 114 evens. So that's what I'm keeping in mind. Again, this is a bigger perspective. I don't know how it's going to get there or if it's going to get there, but I know, right, this will be the next level I'd be looking for a move to. And this means that I can either look for shorting opportunities at this level or buying opportunities in advance of this level. So if I take a line here, let's just draw a sideways line. Again, we see that structure swap. We see support, support. We see resistance. We see resistance. If we can break past this level, right, then I'll be looking for a trend continuation trade in the direction to that level we just pointed out. Now, again, we go down to the lower time frames. As of now, I have no idea if this is going to happen. I have no idea when it's going to happen. But again, this is my weekend analysis. It's simply a bigger perspective. I write down, this is what I'm looking for. Then, or that way, if the market does put in that move throughout the week, right, I can easily come back, update our syndicate members and say, hey guys, price action has finally given us that higher high, higher close. Time to follow up on that trade idea we talked about. I'm not caught off guard or caught by surprise, and I don't have to panic or hesitate. I know exactly what I'm waiting for. And then it's all up to the market on whether it wants to, follow through with my prediction or not. And I'll tell you what, majority of the time, guys, in trading, this is what happens, right? You spend hours maybe doing analysis on your charts, and then you come back a day later and the market has done exactly the opposite of what you thought. You hit this right button, you go to drawing tools. If you're on NinjaTrader here, you say remove drawing tools, boom, and then you start over from scratch. Over and over again. But every once in a while, the market follows through with that idea, and that's where we want to take advantage of it. So if you like what you've seen up to this point, or even if you're getting a little bit overwhelmed at the concepts and maybe the verbiage that I'm using, here's what I recommend doing. I recommend checking out our Syndicate program, guys. It's the absolute cheapest way to get involved with us here at Trade Empowered. It's $1 for the first 30 days, and what you get is essentially analysis like this each and every day through a handful of ways. You have our morning war room meeting that Jason runs, where he comes in at 8:30 and takes you on a live look of what's on his radar in the markets, and also maybe some of the highlights of his London live room trading. You also have the trade floor, where both Jason Greystone and myself shoot in trade ideas on a daily basis. And I try to pop in and give you guys 1 to 2 videos per week looking at longer term opportunities on my radar. We also keep you up to date with any big potential news events that you need to be aware of. So check it out. It's $1 for the first 30 days. I say that if you join and you hate it and you unsubscribe after the first or before the first 30 days are up, all you've wasted is $1. But I think you'll like it, and I think you'll find it worth it. So again, if you're feeling overwhelmed a little bit, don't worry. That's natural. It's a lot of information coming into you at once. Put yourself in a position where you can get reps in the market. You can hear this and see this each and every day. And I guaranteed that's going to shorten up the learning curve by a drastic amount. All right, let's get back to some more charts. So the next pair we're going to look at is dollar Canada. I don't really have much to talk about on dollar Canada, but I just wanted to give you guys an update. This is a trade that I've had on my radar probably for about a month or so. And bigger picture, if you go out to the weekly, you'll see it as well. Bigger picture, we broke out of our consolidation area, higher high, higher close up here. And I'm just waiting for a retest of structure and a chance to attempt to trade this thing all the way up to $1.40. I actually think we can go a little bit higher, all the way up to 146 ultimately, but I don't want to be greedy. So I'm just sitting and waiting, waiting for our pullback, waiting for the right opportunity to get involved and potentially take this as a very longer term trade. So nothing has changed this week so far. But again, we're just reviewing the ideas that are and making sure they stay fresh in my head. So Aussie dollar is an interesting pair. You can see that here's a box we had drawn on from last week. I'm not too big on supply and demand. I know it exists, and for you guys that are technical nerds out there, which is a great thing, by the way, I know you're always going to say, oh, there's a big difference between supply and demand and support and resistance levels. As an educator, I've found it easier over time just to kind of group them together, since the majority of the zones are similar. And again, I know I'm going to offend a lot of people by saying that, but this was a level that I was watching like a hawk for a short opportunity on, and looking for some type of reaction, and you can see that we got it. Now, we actually did find a way to get involved here. I'll show you when we go down to our lower time frame. But overall, I'm not too sold on Aussie dollar either way. I'm still kind of in a neutral territory. You can see we've been in consolidation essentially since March. So there's nothing on the chart right now that tells me there's a better likelihood that we're going to test these previous structure lows before we test these previous structure highs. And in trading, that's what it's all about, guys. When you make a prediction, it's not necessarily about where the market is going to go to. It's about trying to find the path of least resistance. It's about trying to find the market is more likely to go here before it goes there. And that before it goes there level is typically where your stop loss is at. So I've been very cautious with this pair because of that. But we did have a pretty decent opportunity down on the hourly chart. We had advanced pattern formation during the week. Let's see if, just bring on our Constellation history right away. Yep. Nope, not gonna give it to me. Oh, there we go. Took a little time, probably because it's the weekend. You see we had a nice bat formation up here. X to A, A to B, B to C, C to D. So although I didn't have a chance to enter on that first touch of that zone, again, that zone on the higher time frame is going to be right in here. Didn't have a chance to get involved on the first touch of it. I was able to get involved using the advanced pattern formation on a second chance entry on the double top here. And that's kind of the cool part about having different tools in your arsenal. Now, I always advise that when trading, start simple, start with one technique, but as you evolve, add different techniques, add different strategies that you can use. And it doesn't necessarily mean that you're not necessarily doing it to find more trading opportunities, right? More is not always better, but you're using it to give yourself different options. So if you can't get involved in way number A, or number A, way, way letter A, right? You can be patient and wait for a second chance to get involved. And that's what our traders were able to do here with our bearish bat formation. And you can see it rolled over pretty darn nicely. But what's on the table for this week, if we erase this, is a third opportunity, a potential 2618. So you can see we did double top up here, right? Price action broke and closed below kind of the valley of our double bottom or double top, excuse me. And as a 2618 trader, what you're doing is you're taking your Fibonacci retracement tool from our swing high to swing low right here. And you're looking for a move back up into this zone right here. You can be aggressive and just trade it at the 618 if you like, or you can identify this kill zone and then look for your reason for entry inside this zone. And that's going to be your next opportunity, the third strike opportunity at involving yourself in a short trade. And if you guys are unfamiliar with the 2618 opportunity or trading technique, strategy, whatever you want to call it, I've got some good news for you. If you head over to our website, tradingpower.com, right over here, you can see, guess what? One of our free trainings. So literally all you have to do is sign up, click, say start the free training now. It's going to take you to this page. We got a cool little video of this handsome fella. And you can get instant access and learn how to trade this. It's a very simple technique, a very easy way to get started in the markets. So 2618 opportunity on Aussie dollar. That's going to be something that you can look for this week in the markets. Let me just see something real quick. All right, New Zealand dollar. This is an interesting pair as well. Just really have a broad perspective on it. You can see I got stopped out of a trade last week. My only losing trade last week was on New Zealand dollar. And as we were coming into an interesting level, we're coming into a interesting level here because we have two levels of support or two levels of resistance. We had a lower level right here. We had a higher level right here. And if you guys have spent any time with me, I really hate these type of levels. These are kind of trap levels where you have a lower level of resistance and a higher level of resistance right above it. And I did take a cautious approach to this trade. I did get skunked out, which happened, so I don't regret it. It was still a good trade. But you know, never fun to lose money in the market, especially when you're on an undefeated week. But what I'm looking for now is a second opportunity, and this is what we talked about. If the first opportunity fails, we have to be willing to reload and look for a second opportunity to short because we're still at previous structure resistance. And if we go down to the 240, right, we have a very similar setup to what we saw on the pound dollar. If you remember, that was one of the first pairs that we looked at, where we have a big momentum move, right? Market makes basically a straight move up from 68.80s all the way to about 70.50s, right? And then we start to see the buying pressure, right, kind of dry up. The slope, right, changes as we go from a very, very sharp angle to kind of a more, we're still buying, but not as aggressively as before. And we can look for that to come up to our higher structure level and then start looking for a trading opportunity as we get closer to the 71 even handle. So as of right now, there's no type of trade on here. But again, this is the higher time frame perspective. All I'm trying to do is kind of generate ideas on whether I'm looking for long opportunities, short opportunities, and where price action is likely to go. Euro Aussie is next. We're here on the daily chart. As always, we've been starting on the daily chart. And we see price action is at a previous level of structure resistance, right? Look left, structure leaves clues, draw a nice little line in there. You can see we're consolidating right at this structure level. We're starting to put in a little sideways channel right at previous structure. Now we go down to a lower time frame and let's see what we have here. Looks like a false breakout to the upside. Let's go down to a 60-minute chart here. Did we break and close? Looks like a false breakout to the upside. And again, this is these situations are always funny because you have traders that trade breakouts. So they'll see stuff like this. They'll see price action putting in what they call a flag pattern, right? Where you have a flagpole and it goes sideways, and they'll automatically assume this has to break to the upside. But what they fail to do is they fail to take in the bigger perspective of the market. They fail to look left and see that, well, there's probably less of an opportunity to break to the upside because we're sitting right at structure versus a flag formation that says comes in the, the middle of a trend, something like this, where there's not a lot of resistance to going higher. So if we go down to the 240 chart, looks like I got some notes on here already. What do we see here? I feel like we had an advanced pattern here as well. Look at that. Last week was a brilliant week for advanced pattern formations. We had, let me see if I remember correctly, right here, X to A, yep, A to B, B to C, and we got a CD completion. What did I do? I'll just do it manually. I remember we had one. I think we had one. Yeah, right, the 786. Yep, look at that. We had an X to A to B. This is going to be a Gartley formation. X to A to B, B to C, C to D right here. Again, gave a little bit of pain and then easily came back down. We actually have a cipher formation setting up as well, if my eyes don't lie. Let's check it out here. If I take this as my X leg down here at 149.38. Look at that. Are we going to hit it? Are we going to hit it? We do. Look at that. So potential cipher formation is here as well, down at 149.75. I probably have this in my notes from last week, but I like to refresh. I keep notes on all my trades in a journal and whatnot, but I like to start with a clean slate each and every week. I used to have these conversations with a good trading friend of mine, Roy. Great guy, man. He was with me from kind of my beginning stages of going from horrible, struggling, stinky trader to consistently profitable trader and eventually trading coach. And we had a lot of back and forth because we were going through the same journey at the same time. We used to do a lot of dumb stuff together. But one of the things that we talked about was starting fresh each week. We kind of made a pact to, instead of just keeping your notes on there and kind of getting bored and not staying sharp, that each week you erase all your charts, you erase all your notes, and you start over. And if you're doing your analysis the right way, well, then your analysis should be the same. You should be seeing the same opportunities. And that's something that has stuck with me, for a long time, to help with consistency of analysis. So potential cipher formation here. If you didn't get filled already, looking at 149.75. But here's what I'm paying attention to. This is going to be another 26.18 opportunity. Now, we had what is looking to be a false breakout, right? So we had a breakout of our consolidation here. You can see we got above our DSR level, right? Red exterior, green interior, which means this was once resistance. This was once a red box as well. Now it is a green box representing support. And we have come back down past the 50% level. Now, typically, I haven't done any testing on this, but typically, right, if you're looking for a false breakout from these type of pattern formation, who was it? I think it was Linda Ratchke that taught me this. If you come past the 50% level of your consolidation pattern, and that 50% level is actually going to be right here. That's the sign of a false breakout, meaning that there's a less likelihood of seeing that continuation to the high side, which is what we would look at if you're a conservative breakout trader, a break and then a retest. So you want to keep that in mind. Again, I haven't tested it. I've been doing some visual tests on it. But Linda Ratchke is one of the all-time great traders. So, if someone like that is going to say that, you pay attention to it. Doesn't mean you change your rules, but you become on notice. And you can see we've gotten past the 50% mark of this consolidation pattern. So this may indeed be a bearish breakout or a false breakout. And if we are going to see some continuation short, look at this. Look at this. We're going to, here's our double top. Oop, I don't want that. Here's our double top. I still have my Constellation on. Here's my double top right up here. Just like with what? Aussie dollar we looked at. If we take our Fibonacci retracement from swing high to swing low, we could have a potential 26.18 opportunity starting at 150.60s and going towards our previous structure highs. But wait, there's more, right? Can you guys see it? Anybody? This can also be, check this out. What does this look like? What does it look like? potential head, little double head up here if you want. Potential head and shoulders formation at that same level. So that 2618 level, at least the starting point of that 2618 level, will come in right at your previous left shoulder as well. So that could be a head and shoulders formation, which means you have two reversal patterns at once. You have a head and shoulders formation, which is a reversal pattern. You have a 2618, which is that reversal pattern. Not a bad area to look for a short trade opportunity. Again, the risk reward will make sense, as with 2618s. You're depending on where you get filled at. You're looking at maybe at least a 1-to-1. Of course, you can measure out your risk however your rules are based. So not a bad opportunity here on Euro Aussie. Pound Aussie on the daily. Again, some more notes from our strategy lab here. Let's erase all of this. Pound Aussie on the daily. We still have a potential advanced pattern formation setting up. Let's just go down to the 240. I'll show you that first. We have a potential bat formation setting up here on the pound Aussie. So we're looking at an X right down here at 170.69s. Swing low to swing high is going to be our X to A. Our A to B coming right down here. Our B to C. And I'm looking for a CD completion, or a D completion, I should say, right down at about 171.35s here. And if we go back up to our daily chart, let's just put in a line right in here. Let's do that. Put in a line right in there. If we go to our daily chart, this is going to come at a pretty decent level as well. Again, look left, structure leaves clues. We just bounced off of previous resistance up here. We're coming back down. We're finding a level of previous resistance that should now act as support. You can see here that we have resistance, 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 about 5 touches in that level. Add one more touch right here at this red arrow, and then we kind of get above it, and then resistance turns to support. We bounce back off of it, and then we continue higher, and now we're putting in another test of that level. So again, on the 240 chart, this can easily be a structure-based trade as well, but you can also look at this as an advanced pattern formation too, and use that as a reason for entry. Again, I don't expect a full continuation with this type of trade. Again, we're not in any type of continuation pattern, higher time frame, but a decent pattern formation in itself. All right, so real quick before I forget, I want to give you guys a big thank you. A trader actually hit me on Twitter and told me that I finally passed the 30,000 subscriber mark on my personal YouTube page. That was a goal that I've been shooting for, man, I think since last year, and we finally got it. So just want to say a big thank you for you guys that watch my videos. I've been doing a trading blog video this year, which has gotten a remarkable response. It's not necessarily looking at charts like we do here in the Forex market preview, but it's more of kind of like a diary, trying to teach a lesson each day. And those ideas come from the different traders that I work with on a daily basis. And you guys have just given it a phenomenal response. You love it. And I appreciate you guys showing your support by getting the name out there and sharing it and telling friends, hey, you need to check this out. And because of that, you've allowed me to hit the 30,000 subscriber mark. So that's pretty darn cool. I'm very appreciative of that. The next goal is going to be 50,000. And I just want to take a quick second to say thank you so much for helping me achieve that goal. Aussie yen here on the daily. We're actually going to go straight to, you can see here on the daily. We have two potential advanced pattern formation setting up. Let's go down to the 240. That'll give me a clearer look, I bet. Yeah, two advanced pattern formations setting up here on the Aussie yen. Again, if we look at our first one, starting our X leg right up here, right? We're looking at a potential X to A to B, B to C, and a potential CD completion right up here for a potential bearish Gartley formation at 85.39. If we zoom in a little bit and look at this most recent move, we're also setting up a smaller potential advanced pattern formation right in here. This one, our X leg is going to start at 84.50, and we're going to be X to A to B, B to C, C to D. And you can see this is going to be a very deep Gartley completion, or potential Gartley completion, meaning it completes high at a higher retest of our impulse leg, our X leg right here. And what I did was I just changed our Constellation to show us the risk reward. I love drawing out these boxes. It gives me a nice visualization of what I have to risk in order to what I have to reward, or what I can look for as far as reward. And I told you guys earlier, I'm really big on drawing stuff on my charts. And you can see the risk reward is the risk is very, very small here. The reward to target one, that's this green area, that's very, very big. And it looks to be about target one, a 3.8 to 1 risk reward, and target two is a 6.2 to 1 risk reward. So a very, very decent trading opportunity here. And then there's the even bigger one here. This one's not going to have as great as a risk reward because it's a more shallower pattern. But two potential bearish trading opportunities here, Gartley's on the Aussie yen. Gold here on the daily is another interesting one. This is one I was looking for a head and shoulders pattern a couple weeks ago. I'll just go ahead and draw that out. If you're here on TradingView, it should be one of my archived ideas. You can look at it. Let me just find out where it's at. We're looking for a head and shoulders pattern like this, right? We had our left shoulder, our head. We're looking for a retest down here, originally somewhere in this area for a retest of the neckline, and then putting a right shoulder up here. And you can see that happen for the most part. We didn't get we got a slanted line for our neckline here. I prefer a horizontal one. But having a slanted line also tells me something else about this this setup. You can see that because our line doesn't test our neckline here, we're continuing our series of putting in higher lows, right? Starting down here, you can see we have a higher high, or we have initial high, and we have a low. Then we have a higher high, and a higher low, and a higher high, and a higher low. For you guys familiar with how to read a price chart, this means what? What does this show us? What type of trend, right? This shows us a bullish trend. And if we're going to continue in this bullish trend, right, well, the next place we're likely to hit is a retest of our previous structure high right here. And what happened is, as we approach this shoulder, it looks like this shoulder is not going to hold. And that's we talk about head and shoulders patterns and different ways to trade it. You can be very aggressive and trade the right shoulder, but the traditional way to trade it as a chartist, right? The traditional way to trade it is by trading it essentially like a trend continuation trade, where you wait for the break and close of structure and then trade the retest. And this is one of the reasons it can be very dangerous, because although it looks like it could be a head and shoulders formation, it could easily be a trend continuation trade or another extension up. We just don't know. So waiting for that confirmation is key, in my opinion. But you can see we had a breakout here. Price action gave us, right, this ascending triangle where we came up, and eventually we broke up to the upside. And again, what I would expect is a retest of our previous structure highs up here. Where is this at? About 1292s, that area. And we can certainly look for a retest of structure, right, and move back down into our ascending triangle, and a trend continuation opportunity on the way up for gold. So that's what's going to be on my radar this week as well. Now, news-wise, this is an interesting week here. And just scroll through this for the first time here. We're looking at Tuesday or Monday, which is a bank holiday here in the U.S. So that means thinner markets, and thinner markets combined with big announcements is usually a pretty bad combination. For any of you guys that have ever traded or seen the explosions that happened during the Asia session when Aussie or New Zealand news comes out, it's not fun because the markets are thinner. So I'm expecting thin markets tomorrow. And we do have ECB President Mario Draghi speaking. I don't know if he's doing Q&A, testify about the economy. Yep, looks like he'll probably do a Q&A afterwards. So this can be very dangerous. The Q&A is typically where the market gets a little bit funky, right? The speech, everyone knows the speech. They know what he's going to say. You know, these guys do a great job at saying nothing. The Q&A, that's where they can get caught off guard by some of the questions. And if they hesitate or they something like that, you know, the market starts to form these opinions. So we want to be careful of tomorrow at 9 a.m. When Draghi speaks. Heading over into our week, we also have some Kiwi news, consumer confidence. That's going to be Tuesday. See Wednesday, Canadian GDP. This is going to be interesting for the Aussie here on Wednesday, 9:30, and then Thursday when we start getting into the fun stuff. We have manufacturing PMI for the pound coming out. We have our ADP non-farm employment change. This is the precursor to our Friday jobs number, right? Our Friday jobs number. We have more ISM coming out, oil news coming out later for the dollar as well. So Thursday is going to be an interesting day in the market, and that's going to be, right, leading up to Friday's news events, which is the big one, construction PMI for the pound. We also have trade balance for Canada in red, but average hourly earnings, non-farm employment change, and then the unemployment rate, all of the fun jobs numbers that come out for the dollar on the first Friday of each month. So pretty decent fundamental week as well coming towards the end of the week. Now, again, we don't trade off of fundamentals here at Trade Empowered. I'm a chartist, a technician, so I trade what I see on the charts, but I do think it's important to be aware of what news events are on the radar, especially those which can kind of cause the funky moves where the market acts out of its norm for short periods of time, because you want to avoid those. You don't want to take any unnecessary losses. So Syndicate members, I'll keep you guys updated during the week on what news events, if there are any other that I look at and that should be avoided or you should pay attention to. I haven't had time to research it or dig into it. That's kind of the last priority, but I'll shoot it through the trade floor. I'll share with you in a video this week for you guys in the Syndicate program. All right, so I know that was a lot, but thanks to technology, you can go back and watch this as many times as you want for it to make sense. But leave me some feedback in the comment box below. Let me know what you think. Let me know if you kind of like the less is more approach like we've been doing more recently, where we're concentrating on maybe one or two opportunities in the market, or if you like the kind of the more is more approach, where I'm taking, not going into as much detail, but taking a broad look at everything that's on my radar for the week. You guys know I kind of gear this video to what you get the most from. So I do read each and every comment. So if you have an opinion, leave it in there. If you just are like, hey, Akil, I like either way, I just like seeing the videos, feel free to type that in as well. But I will see you guys next week. Remember, Monday is a Memorial Day, so no strategy lab. We've been kicking behind in that strategy lab, so I'm a little upset that we're missing it this week. But we'll be back next week, next Monday, with our strategy lab, talking about back testing and crunching the numbers and optimizing your trading plan. And it's going to be a fun session. The rest of you guys, I'll see you in the live room. I'll see you in the Syndicate. And until then, plan your trade your plan. Take care. If you like what you see, make sure you hit that like button. Make sure you hit that subscribe button. And you guys have a great holiday weekend. All right, traders. So I hope you enjoyed today's video. And if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradeempowered.com website, or also take a look and you'll see more videos available for you. Have a good one.